It's really interesting because when you talk to, we're here in the Middle East right now, you talk to people, they know SUI because it's Facebook. You speak to people and everybody says, yeah, they're really interesting.
How can I build wealth in crypto without any luck involved?
So simply, it's the same advice to everybody who comes into the space. Just buy Bitcoin and dollar cost average. So buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology? Because Bitcoin is just a part of the space. It's the digital gold is the store of value. But then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects.
Former Goldman Sachs executive Raoul Pal says cryptocurrency markets could experience a prolonged, longer than expected bull market. Despite a cycle that is lengthening due to a slower than expected rate-cutting cycle, cryptocurrency markets are entering what he calls the banana zone, the most parabolic phase of the digital asset cycle. The cryptocurrency cycle is expected to peak in the first half of 2026. All signs point to staying vigilant, not screwing things up, not losing control over your tokens, not using leverage, not getting your wallet hacked, staying vigilant, not giving into the fear of missing out, doing what is necessary, and we will move on to the next phase. It will be harder because when that happens, we will have a 35% drop and everyone will be asking, is it over? And they will be certain that it is over, and everyone will tell them it is over, and it will not be over. Our work suggests that due to the lengthening of the business cycle, rates have remained high for longer. The projected liquidity suggests that without guarantees, all of this will extend into the first or possibly the second quarter of 2026, which would coincide with Trump's attempt to win the midterm elections. So everything is in place. According to Raoul Pal, SUI is growing more rapidly than Solana. Before we can move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. And then you need to be paranoid about every single other part. Because don't forget, in the end, we go back to the point I made earlier, everybody's life savings is in this. This is the single most important thing for most people in their financial lives. Does the 6% yield actually matter to you? Oh, but it gives me cash flow. But if I'm 6%... you get 6% and there's a percentage chance of losing all of your money and you don't know what that percentage chance are. Now, that's not the case with all DeFi or anything else. Well, I think when the ETH ETF has yield, which will come, it'll be more attractive to them. How do you get the Bitcoin ETF? Well, it'll be the same as the safest yield will be this kind of borrowing fees for borrowing it. And if it's run by large institutions, you've got some backstop protection. All ETFs have some sort of yield from borrowing that's often taken by the asset manager. I just don't like it because the capital gains is so big. We're not trying to eke out an extra few percent here.
Solana and SUI cryptocurrencies are emerging as layer 1 champions. However, their architectures differ radically. Solana combines proof of history and proof of stake. This combination guarantees very high throughput and almost token cost. So DeFi and NFTs are thriving there. However, repeated outages highlight its limitations, which explains the density of its ecosystem. Yet the shadow of network-wide outages still lingers. This choice makes SUI the ideal solution for video games and Web3 applications. However, its still nascent ecosystem suffers from a lack of partners and developers, which is an obstacle to widespread adoption. Given these distinctions, the duel promises to be exciting. Solana dominates the scene today. The younger SUI focuses on innovation. Each serves a specific need. Both blockchains should coexist, each in its own niche. Earlier this year, Raoul Pal called Solana stupidly optimistic for the long term. His analysis, based on a logarithmic chart, identified significant resistance around $250, a level last reached in November 2021. For him, holding this threshold was crucial to consider a real breakout. He then outlined an ambitious target, $410, corresponding to the 1.618 Fibonacci level, which some analysts consider a key area for price discovery. Since this prediction, the market has not followed the expected trajectory. Solana, which was trading around $216 in early January, has undergone a severe correction. While the bullish scenario remains theoretically valid, the trajectory appears steeper than expected. Paul then enthused SUI is ready to enter hyperspace, believing that long-term investors could continue this momentum. However, the encouragement quickly faded. The SUI cryptocurrency fell to $1.71. Volatility remained at the center of its trajectory. Bitcoin could reach $450,000 in a liquidity supercycle, says Raoul Pal. Bitcoin's annual rate of change is driven by financial conditions with a 3-month lag, said Paul, highlighting the remarkably consistent correlation between total global liquidity and the price movements of major assets. The correlation between Bitcoin and global liquidity is 90%, and with the NASDAQ, 95%. It's hard to argue otherwise. Paul noted that most people don't understand the true driver of cryptocurrency cycles. Everyone talks about the halving, but this refers to the debt refinancing cycle. Every 4 years, global debt is renewed, and central banks are forced to inject liquidity to prevent a systemic collapse. He added that the average global debt maturity is 4 years, concentrated in the 3 to 5 year segment, which naturally produces cyclical waves of liquidity that coincide with cryptocurrency market booms. This mechanism, Paul explained, is a global financial game of deception. Scarce assets keep going up. Real estate, stocks, art, gold. Young people can't afford them. What's really happening is a global tax of 8% per year that you don't understand. In this context, Bitcoin, with its fixed supply and decentralized nature, becomes, according to Paul, a rational escape value for capital. Paul's broader view is that we are now entering the banana zone, a term he uses to refer to the high-speed phase of the cryptocurrency cycle, where prices move sharply upward. Every cycle is similar: breakout, retest, banana zone. We've experienced banana 1, the corrective zone banana 2. The next step will be banana 3. He believes the current situation is exceptionally strong due to the combination of factors: a synchronized expansion of global liquidity, a weakening dollar, the beginning of monetary easing by central banks, and an underexposure of individuals and institutions to risky assets. Paul expects this cycle to potentially extend into the first or second quarter of 2026, especially if the political dynamics surrounding a potential Trump re-election further exacerbate the liquidity cycle. Whether Bitcoin will ultimately reach $450,000 remains to be seen, but Paul's thesis is clear. The macroeconomic winds are aligned. The data supports him, and this could be, as he says, the greatest macroeconomic opportunity of all time.